All right. Let's do a quick update. Today we did pull back from that price target. So I had us going up towards about 608. And then from there, I said, be careful. We do have a gap down here at 604. We did get the rejection and we did close the gap today. And we are down below the daily 5 EMA. So while we're down below 606 and getting this rejection from 608, it is possible if we continue lower below the gap fill and continue down below 604 that we could come all the way back down towards a retest of 598. So if we do break down, we are looking for 598. If we do not break down below 604 and we continue higher, it is still possible we go higher towards 614. So this is a bull trend. So do not think just because we got one red day that everything means we're topping and we're coming crashing down. That's all fear mongering. There's nothing that's going to tell us a top is in unless we roll over and start to form a downtrend. So the main thing you can take away from this chart is that you should have locked some profits. You should have some dry powder, which means you simply just have some cash if we come down towards 598. And then at 598, that will be a good opportunity to start buying the dip. If we do not make it down to 598, that's why we still have runners and that's why our swing trades are still open. They should be reduced positions as you're locking profits, but you should have them nonetheless because it is a bull trend until it's not. If you don't believe there's enough upside reward to be worth it, then simply reduce your position size on your swing trades. But it's a bull trend and there's nothing that's going to tell us when the top is in. We need to ride the trend until the end, and unless we start to roll over and die here, this is a bull trend that can likely still go higher. On the NASDAQ 100 triple Qs, we were down 0.78% today. And again, we hit the price target right around 525. And from there, we are getting a rejection. But as you can tell from price, we did not even break down below the daily 5 EMA. If we do break down below 521, then it means we will likely fill this gap at 517. But if we bounce off of 521, we could break out and still go higher towards a brand new all-time high at 534. So we'll know very soon tomorrow with the price if we continue lower or if we start to bounce. If we start to bounce, you will be looking for 534 by the end of the week or early into next week. And then finally, we have Bitcoin, which is struggling to break and close above that price target at 102,000. If we cannot break above 102,000, that means we are likely coming down towards 84,000. The critical support right now is right around 92,000. You can simply stay bullish above 92,000 and then get risk off if we break down below it. And if we do bounce from here and we break above 102,000, the next price target will be higher at 108,500. So you have very clear risk levels. I do not think the reward is worth the risk, but if you're already holding long, those are the targets that you're watching for. So remember my suggestion, this is the last month of the trading year. Don't do anything high risk to ruin your year. Simply play at low risk, ride the wave and ride these trends, and then get ready to absolutely crush this market in 2025. I think next year is going to be very volatile and it should be very fun for us traders. So if you want to come trade along with me, I have multiple services, but if you want access to my trade alerts where you get the exact percent allocations I'm doing for TQQQ or SQQQ, that is the Stock Journal Trade Alerts, which you can find out how to join by clicking on the link in the description of this video or the comment section. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.